Yeah, so how many of you, I mean, for some of you, is this the first live session that you're joining? Okay, so I guess I'll start. Uh, Good evening, everyone, and welcome once again. This is the course Introduction to Accounting and Finance for Civil Engineers. This is the live problem solving session for the contents of week 8, that is the final week for this course. The course instructors are Professor Sudhir Mishra and Professor K.N. Jha. I am Venugopal Mahajan, a research fellow at IIT Delhi. So, coming to the contents of this course, till now we have covered a lot of topics, especially in the last week. We discussed accounting basics, revenue recognition, and contract status. So, in this session, we will be focusing on again, we'll be repeating assets and liabilities somewhat, accounting statements, preparing income statement or P&L as you want to call it, balance sheets, and see what is the cash flow. Then we will discuss something about working capital and obviously ratio analysis. So, do you guys have any questions in the topics that have been already covered, or any query that you would like to discuss in this session? See, this is a live session and an interactive one over that. So, uh, we both will gain much if the interaction level is high. You're also dedicating your time here, so please try to make it more worthwhile. Mm, okay, some queries. Uh, Please use your mics. I mean, that would be quicker for both of us. Yeah.
Right. Yeah. Hi.
Hi.
This is my first time attending this problem solving session. Thank you for sharing the Google Drive links for all the slides and the online videos. I'll go through the same.
Okay.
I had some queries regarding the week 7 assignment for the accounting practices. The assignment had given some terms with regard to assets and liabilities, which I could not find at all in the course contents. And I actually had to hunt in Google for what means what will fall where. And accordingly, after that only, I could understand what credit and debit it would fall in. So yeah, would it be nice? Can you at least list what all items generally would come under those five account types? Assets, liabilities, revenues, gains. That'll be really nice because
Uh,
some of those terms like account receivable I was seeing for the first time, and I had gone through the course
uh,
content. I couldn't find it.
okay. Uh, did you go through the, video recording for week 7?
No, I have not gone through that video recording.
Okay. So in that, our focus, the main focus there was on discussing what are liabilities and what are assets. And basically, when coming to the heads, we discussed multiple heads there. Now, see, the problem is when you there are a lot of transactions happening and you start grouping them, you want to reduce the number of groups, heads here. So you make sure you find out some very common heads and list them there. So in that case, your heads get very limited. We'll talk what are these again. So anybody else with the same query, so I will know how long to address this problem. Okay, so just give me a moment to add an add one empty slide here. Do let me know when I am going fast or too slow or you're not following anything. Just let me know. Okay, so as the topic also for week one's discussion was week lecture one of week 8 was liabilities and assets. So what are these? You have gone through Google, so maybe you can tell me your understanding of this.
Like those definitions, the
No.
professor had clearly explained. Liabilities is what we are, what we owe, and assets are what we are
Yeah.
owed, either in form of physical assets in terms of cash, buildings, or whatever, and as accounts receivable also, as I understood through the assignment. So it was those things, because the examples that he had shared in the lecture, for two examples,
Yeah.
it had covered capital, cash, and all covered, but the account receivable was like a curveball. I did not know where it was, and even
Okay.
in Google also it was contradicting. Two three places was saying something else, and whether it behaves, how is accounted for, those sort of things.
Uh,
Services received, one services, some item was there, that
yeah.
also whether to count as liability or an asset was confusing.
Uh, okay. So, I mean, I can gather that there are quite a few new terms coming. But even if you talk about each and every term, very easily from the company's point of view, you can decide on the part that whether it is an asset or a liability. Like if it is accounts receivable, you know that the company is going to gain something. This is what the company owns, right? So if it owns, then it is going to be an asset.
Okay.
Now the part comes deciding where it will go. I mean, is it a credit entry or a debit entry,
Yes.
right? That kind of makes okay. So debtors and creditors, these terms are quite familiar to you. And
Yes, that was.
yeah, in the lecture itself, one convention table was shared. Like if it is an asset, so
Yes.
increase in asset will go into which, right?
Yes. Yes.
So that table is with you.
Yes.
Let's make the table with. I mean, repeat the logic and make the table.
Okay.
Okay. So uh, liabilities. Uh, let's start with liabilities. Give any example of liability.
What was
I mean, there is some creditor that you have to pay, right?
Yes.
Right.
Yes.
So, liability, and there is some value coming in terms of creditor. So, from this, you can gather that if liabilities are increasing, it is a credit entry.
Yes.
Similarly, if it is decreasing, opposite it has to be a debit entry.
Yes.
Similarly, assets, one asset that you have is debtor. So again, its increase will be a debit entry, its decrease will be a credit entry. Now you the heads you mentioned, incomes and expenses, where do they go?
Okay.
Right. So we saw that if the company is earning any income, right? If the company has some earnings, who owns the earnings?
The company owns under the asset side.
Okay, let's repeat it. Okay, uh, company produced some goods of worth 10 lakh. Okay,
Okay.
the cost of these goods were 10 lakh. It sold these goods for 2 lakh, right?
Yes. Yes.
So if you were to make an entry of this, what would have happened? This cost uh, would have been initially your finished goods, right?
Yes. Which is a work, your work, either work in progress or sold. Yeah.
Yeah. No, I mean it's already finished. That's why we are ready to
Finished
sell it,
good.
right?
Finished good, sir. Yeah.
Yeah. So finished goods would have been 10 lakh. So
Okay.
if there now when you are selling it, what is happening? When you are selling it, this change in finished goods is minus 10, right? You
Yes.
sold everything.
Yes.
Wait a minute. I don't know why my pen is behaving like this. This is your opening balance sheet, and this is your change.
Yeah.
And so your closing balance sheet would have been zero in case of finished goods, and
Yes.
it is an asset. Now, So where do you make the entry of this 12 that is coming? So you will say that I am gaining cash,
Yes.
right? Let's suppose it was 0 initially. So now you have got plus 12 lakh, and cash is an asset.
Yes.
Um, Entries are here and there, right? Change in
Mm.
10, 12.
Yes.
So from here, if you were to balance it, you can say that there is going to be 2 lakh error now.
Yes.
The point
It,
is, there is some earning here.
retained earnings. Yeah.
Earning is of 2 lakhs.
Yes.
Now, is this an asset or a liability?
I think in the lecture it was told that retained earnings will go into the liability. Not so sure. I don't remember.
Why?
Because you owe it to the people who have financed your capital and
Yeah,
your
definitely.
shareholders.
Yeah, exactly. I mean, the company didn't come with some money, right? It got
Yeah.
its money from investors,
Yes.
whoever hold the capital. So whatever profit is going to be there, it is going to be of the investors. Whatever loss the company is going to make, it is going to be of the investors, right?
Yes.
So that's why if company earns 2 lakh, it is still a liability, right?
Yes.
So this retained earning of it was 0, so 2 lakh change and 2 lakh now, right?
Yes.
So similarly, uh, change and closing balance. So similarly, you can say that if there is some income, and if
Okay.
your income is increasing, it goes into the, it is a credit entry because it is increasing your liability,
Yes.
right?
Right.
So it's suppose it should be debit. Similarly, if there is some expense, now this kind of seems like what is happening. How can expense increase in expense be a asset?
Mm.
I mean, anybody who would like to answer. I mean, if our expense is increasing, how can it be an asset? Anybody? Or just venture a guess. I mean, if expense is increasing, as we can see that income increases credit, so expense increase should be a debit entry, right? Corollary. So this is debit and this is credit. So why is expense or asset?
Because it cannot be a liability.
Uh,
Because
okay,
liability requires I don't know, some well
okay.
expense account. But I know I think but then there will be double entry. There will be some entry recorded liability also against this expense also. But I cannot say for why expenses be recorded an asset. No.
Okay. Let's try to see it with another example. Okay. So initially, okay, right now you have a cash of 12 lakh, right? Let's move on with this. You have a cash of 12 lakh and you, because debit is increasing. Uh, yeah, so I mean, expense and debit. Okay, debit is increasing, it is an asset. Ma'am, can you elaborate what you have written? Because it is giving me conflicting thoughts. Please use your mic, that would be easier. Mm, okay, so what is happening is that in terms of companies, when we are talking about expenses, what we are doing is generally we are using it to buy the stock, I mean raw material, or pay for the wages, right? And if you are paying through these expenses for these items, like there is some expense that is adding some raw material, some stock is increasing, or the value of stock is increasing in case of like work in progress or finished goods. So you can see that expense is directly linked to whatever stock you are buying or whatever wages you are giving away. So in that way, expense is your asset. Expand increasing your expenses, it is a debit entry. Can you imagine it now?
I think we'll have to just treat it as an anomaly in the
No, no, no.
English
See,
language.
no, no, no. That is the thing. I mean, uh, we are we are working on accounting. I mean, trying to study what accounting is, and accounting is a language. The only point of going through all these are that there has to be something that can be conveyed to each and everybody in terms of figures, and everybody understands the same thing. So there cannot be an anomaly. Okay, so uh, let's add something. I mean, this would be kind of a small. Mm, yeah. So let's make a company of our own, and we'll make it quick. Uh, I will write my assets here and liabilities here. I won't be making it formal, just try following. Okay. Let's suppose that you infuse a capital of 20 lakh. Okay. So if you infuse a capital of 20 lakh, it will increase your cash by 20 lakh for the company.
Yes.
Okay. This was the first day. Now, next day, what happens is you bought 10 lakh worth of stock. So, stock 10 lakh, your cash will reduce, right?
Yes.
So, your cash will now be 10 lakh. But if you balance this, it is again 20 lakh. I mean, balance sheet.
Yes.
Uh, once you okay, this stock is of 10 lakh, and let's suppose to complete to make this sellable product, you have to include 2 lakh of labor. Okay,
Okay.
so let's suppose after 1 month, what would be your wages if you have not paid it? 2 lakh, right?
Yes.
2 lakh of wages. Now what happened to your stock? Stock has been used now,
Yes.
so it would be zero. But your finished goods,
Would be 10 lakhs.
why 10 lakhs?
With profit.
No, I am not talking about profit now. What would be
Okay.
the cost of finished goods now? It is 10 lakh of raw material
Right.
plus
Right.
2 lakh of
Labor.
labor.
Labor also.
Okay, let's repeat. To produce the finished goods, you needed raw material of 10 lakh. Then you paid labor 2 lakh to make it a finished good.
Mm. Yes.
So that makes the cost of finished goods as 12 lakh now,
Yes.
right? So
Yes.
12 lakh. So now what is your balance sheet? It is 22 and 22 on both sides. Again balanced. So now you can see that whatever expenses you are uh, I mean whatever the expenses are occurring for the company, it would be in terms of buying raw material, or paying for the wages that will increase your finished goods, or some overheads that will again add into your work in progress or finished goods, right?
Okay.
So can you see that all the expenses that are occurring, that you have to pay, let's suppose this is accrued wages or some creditors, that would be your liability,
Yes.
but these are going to be your assets, and increase in assets is debit that we discussed.
Yes.
So I hope it is a little bit more clearer. So is it okay?
S- So,
Okay.
like, the spending would be considered as an asset then by that
Yeah,
definition.
because by spending you are anyway increasing some asset here and there, as you can see. I mean, and spending would be from, if you are spending in cash, cash is reducing, spending you are increasing in some head.
Okay. So, if by that definition, I'm spending on wages.
Yeah.
But then wages will be considered as an asset or then a liability.
See, you are talking about balance sheet. So, what is a balance sheet? Balance sheet is a snapshot in time.
Hmm.
Okay. So it shows you just a moment in time that on that day, what was the condition.
Correct.
So either you would have paid the wages or you would have to pay the wages.
Yes.
If you had already paid the wages, there is no liability, your cash will decrease.
Casual decrease. Correct.
And if you have to pay the wages, then it is a liability, accrued wages.
Okay.
See that this
Okay.
is the kind of a difference between balance sheet and income statement.
So just like sometimes if we are purchasing, if as a contractor or as a construction company in the same example,
Yeah,
I am purchasing something on credit.
yeah,
Say it be just continuing the same example. Let's say I am purchasing labor services on credit,
okay,
30 days
yeah,
credit. In
okay,
that case, will that transaction come as an asset? Because
yeah. See,
it is spending, but I am not, the cash is not debited for the double entry.
yeah.
And this thing, yeah.
Uh, so what is happening is that let's suppose you bought some labor services, right?
Yes.
Now this labor services uh, you can spend on any of these things, raw materials or finished goods, just to increase your asset, right?
Correct. Correct.
So let's say you bought labor services of 8 lakh,
Okay.
but you haven't paid them yet.
Yes.
I mean, you got it on credit.
Yes.
So your creditor will increase by 8 lakh.
Yes.
So
In that
now
the
if you see the balance sheet, it would be 30 on both sides.
okay.
So you can see that it is balanced.
Hmm.
It may look like we are entering each and every amount twice, but
No,
it
that
is,
is the system which is given in the lectures that I understand.
yeah,
But I just, like you said, it's a snapshot in time.
yeah,
So here, but the words that we use in the entry also are very important. Like you're not mentioning its wages in assets. You're substituting with labor services. I'm just
yeah,
saying. But default, when you say wages, it usually goes in the, well, and I think there was an example in which there was both wages as well as accrued wages. Both were there.
yeah.
So it is.
So you can, I mean, in labor services also you can write it as wages. Like, uh, what is happening is that let's say XYZ company got an engineer. Okay, so that engineer is an asset or a liability?
I've got him as an engineer, but I've not paid him. So he's an asset.
No, I mean I'm not talking about paying something,
Okay.
paying someone.
Okay.
Okay, that
Okay.
just hired an engineer. So that engineer is a liability or an asset?
He's an asset.
He is an asset, right? So that asset would be at, I mean that is on asset side. But what about the wages that you have to pay to him?
Well, wages will, once it's paid, it will, the wages will go to I think no, liability will also
See,
reduce.
you are
Cash,
not.
cash out.
Yeah, once it's paid is not the thing when we talk about
Thing
balance
you're
sheet.
asking.
Just a
Okay.
moment in time. If we
Just a
haven't
moment.
paid him, his wages would be accrued wages.
Yes.
So it's like that engineer is actually
Mm.
adding to your, I mean, it is similar to your work in progress. It is
Yes.
adding the
Yes.
labor cost, similar to that.
Yes.
So I hope you get an idea.
Sure. Thanks for the example.
Okay,
Okay,
again.
would it be possible just to go some of the additional terms also which are introduced in the assignment and just putting it up, because they're all mostly revenue and payable and receivable kind of things. So just to understand
Uh,
asset and liabilities. I think there's somewhere under revenue also, revenue category also, revenue gains also will also come.
Uh, yeah, I guess these are the example. These are the terms that are coming in the upcoming numericals that we are going to discuss.
Okay,
Yeah,
fine.
we'll see if they are in the numericals, and if not, we will revisit them.
No problem.
Okay. Yeah. So, moving on to some example, I would suggest you to go through week 7 uh, problem solving, because in that just, I mean, 1.5 hours we spent only on discussing what is going to be an asset, what is going to be liability, and how they are going to change.
Okay, okay, fine. Thanks. I'll go through that.
Yeah.
Thank you.
Okay. So, I mean, let me turn off the camera. That will save the bandwidth. And for everybody, please use your mics anytime because I won't be able to see the messages in slideshow mode. Okay. So, coming to the questions, I mean, first part, assets and liabilities. In the context of the data given, consider the following statements. So, you have been given some things: capital, mortgage, land, furniture, outstanding expense, and stock. So, which of the following is an asset, which of the following is a liability? Help me determine. This is an interactive session, so I mean, I will. It would be very helpful if you can answer. We can move fast.
Land, furniture, and stock will be an assets.
Okay, so what I'm getting is land, furniture, and stock would be an asset. What about others?
And yes, sir. Yes, sir. 8 lakhs it is.
What about others? Are the rest of the things liabilities?
Yes.
Mm, okay, so according to you, what is the sum of assets now? Is it coming to 8 lakh, right? And liabilities, 7.5. So, any question, any trouble understanding which will go in which side? I mean, is it a asset or liability? What is this term outstanding expense? And why is it a liability? We just discussed in detail that expense is an asset. So why is outstanding expense a liability in your case? See, this is what is happening when you talk about accounts receivable, accounts payable. Yeah, anybody, why is outstanding expense a liability? Right now, you told me. Mm, yeah,
It's something which is owed.
what is happening?
Outstanding expense is something which is owed. So
Yeah, definitely. I mean, the basic definition of asset and liabilities. So it is outstanding. You still have to pay that guy, right? So it is a liability. Asset is 8 lakh, liability 7.5 lakh. That makes statement 1 and statement 2 both true, right? So next question. Now this kind of makes it somewhat technical. In the balance sheet, assets are entered in the decreasing order of their liquidity. Inventory is not considered as a part of current assets. So, a term that is coming here is liquidity decreasing order. So, what is liquidity?
it's cash in terms of how we can liquidate into cash.
Okay, yeah. So, I mean, how fast you can get or realize that value in cash, right?
Yes.
So, in balance sheet, assets are entered in decreasing order of their liquidity. Yeah, that is a true statement. Right now, we were going in a very informal way, so we were not worried about what is the order. We just wanted to make sure that it goes on the right side. So, th- uh, if you have assets like buildings or warehouses or something, fixed deposits, even, I mean, buildings, warehouses, some furnitures, they would be considered your fixed assets. Your stocks, cash in hand, that would be your current assets. So you would write your fixed assets in the starting and current assets after that. Now, second part, inventory is not considered as a part of current assets. True or false? I mean, we just discussed, right, that inventory, it is a, I mean, stocks, they are your current assets. So this statement is wrong, right? So one is correct, two is wrong. Now coming to a bigger question. I mean, it has got a lot of things and some terms that are different. So again, we will go in the same manner. Start deciding what is an asset and what is a liability. So equipment, asset or liability. I mean, what we have to do is we have to establish balance sheet for the company, and we have to determine what is the owner's equity. What do you mean by owner's equity?
Asset minus liability.
Uh, okay, total assets minus total liability. But so one thing, I mean, we discussed in this example, our balance sheet was coming out. I mean, as the name suggests, quite balanced, right? Assets minus
Yes.
liability is going to be zero.
Going to be zero in this case.
I mean, not in this case. In every case, if you are making it a balance sheet, you are calling it a balanced sheet.
Hmm.
So it is going to be zero.
Then maybe that is because that profit component is also being treated as a liability, right? Then
Uh,
put.
See, even if you add some profit, then that means your cash increased somewhere, right?
Hmm. Correct.
So that makes, I mean, balance sheet is a snapshot in time, and it's balanced. So okay, so yeah, that definition, the formula part is accurate. I mean, it is exactly what you said. It
Right.
is total assets minus total liabilities. Now, in the previous questions, we discussed the order of writing uh, cur- assets, right? That first fixed assets and then current assets.
Yes.
Similarly, we have got order in case of liabilities also. We have got so what kind of liabilities do we have?
I think there are two categories: fixed liability and current liability. Again,
Uh,
depending on that 1 year threshold.
okay, so yeah, that is one definition. I mean, 1 year threshold is there for deciding if it is a current liability or not. And one more thing that comes is the stocks and capital part, right? That you have been putting as liability. I mean, it is a liability. So you treat it as a separate head,
Okay.
capital head. I mean, you talked now that when we make T accounts, we have got separate heads coming.
Yes.
So that is a separate head. And what happens is when we make income statement or balance sheet from the T accounts, we directly copy the headings. I mean, we bring the heads and write the amount balance brought down, right?
Yes.
So similarly, their capital head is there. So that gives you your owner's equity. So now you have to calculate these two things in this question. Let's start marking it. Equipment, asset, and overall you would say fixed asset, right?
Yes.
Creditors,
Um,
Liability, sir.
current liabilities, right? You have to pay them right now.
current liability.
What about
Yes.
bank overdraft?
Asset.
Asset or liability?
Liability, sir.
Okay, so one we have got liability. No, no one challenging this. Okay, next. What about product inventory?
Should
Uh,
be an asset.
yeah, product inventory is an asset.
Yeah, sir.
Yeah, debtors, again asset.
Asset only.
See, debtors you can call them by another name. That is accounts receivable.
Yeah, accounts receivable.
Okay, that
Yeah.
this is something that you have to receive. Uh, Buildings and lands, fixed assets, right?
Fixed assets.
Capital at the end of previous year.
Assets only.
Okay, once more. Capital at the end of previous year. I mean, you have got two choices only. So if it is not an asset, it is a liability.
It's
See,
basically cash in hand, so it should be an asset only.
see, this is the term written here is capital. Okay,
Okay.
not cash, capital.
Okay.
So capital, you know that capital is a,
Capital
Liability.
comes in liability.
We have to pay this.
yeah, liabilities, or let's see how it comes. Okay, cash, asset, current asset, vehicles,
Assets.
fixed assets, office equipment, again fixed asset,
Yes.
profit for the year, and dividend payment. Where will these two terms go?
Liability.
So profit is a liability, and what about dividend payment?
Should be.
Mm. Okay, just these two terms coming back to them. I mean, what you have to make is you have to make a balance sheet, and in the balance sheet there is no, what you can say, there is no head for profit or dividend. I mean, what you have got is you have got some heads similar to what we were discussing: assets, liabilities, stock. Then you have got expenses and you have got income. So profit is not actually your income. Your income would have been profit per the plus the cost of goods sold, right? So profit and dividend would will actually go into your income statement. So from that income statement, you can see that if this is your profit and this is your dividend, so your retained earnings would have been
These two. Combination of them.
a combination or something else. So initially, when you sold something and you earned some profit, your retained earnings would have been this, right, equal to profit, 25,000. But at the end of the year, you want to give dividends to your investors. So that is going to reduce your retained earning, right?
Yes.
So minus 12,000. So that brings your retained earnings at 13,000. And you know that retained earnings is a part of liability, right? This is a liability. Uh, now let's try to make the table. Uh, so yeah, I mean, you guys know how to make a table. Let's just check if these are correct or not. Can you do the sum of assets and liabilities? What is coming? Okay, so on as fixed asset sides, you have got equipment, buildings, vehicle, and office equipment, right? So 5 plus 9, 14 plus 4, 18. This was, I get, yeah, 188. So your fixed asset is 188,000. What about your current assets? Uh, Current assets, you have got product inventory, debtors, and some cash is also there, right? So 20, 11, and 12, 43. So your total assets becomes 231. So now if we have done this correctly, your total liabilities should also be the same. So are you guys trying this?
Yeah.
Okay. Yeah, I mean, let's see. We have got what? We have got 12 plus 16 plus 190. We'll add it later. 12 plus 16 plus 13. right? That is 41 and 130, 190, 231, right?
Okay.
Yeah, I mean 12 plus 16 plus 13 gives you 41 and 190, so you have got 231 as your liabilities. Now, what about the question, what is the owner's equity? You have got fixed assets, current assets, but in liabilities we didn't do the breakup. If you had to do the breakup in liability, you would have found out that the current liability is only this amount,
Bank
right?
order.
28,000.
Good.
So, or even your total liability would have been this only, because capital at the end of previous year is uh, is going to be a part of, right, your share capital, your I mean capital head. So owner's equity would have been 231 minus 28,000. How much is it coming? 203. And let's check, 13,000 is your retained earning and your capital was 190, so that is also 203. Okay, so owner's equity we checked like that. Now coming to profit and loss statements. Bad and doubtful debts can be shown as a part of sundry expenses. Okay, so is this statement true or false? Now you know what are expenses, and you know that okay, sundry expenses, some miscellaneous ones that you don't want to talk about them. I mean, they are miscellaneous. You can't attach them somewhere. So are bad and doubtful debts your sundry expense? No, they are not. They actually come under a separate head. Okay, when you talk in income statement, bad and doubtful come separately. Uh, so that first statement is false. Second, profit and loss statement lists the profit and losses for each transaction carried out over the period over which the statement is being made. Okay, profit and loss statement, income statement. Uh, Statement 2, any comments?
It shows only the overall profit loss and not for each transaction.
Yeah, definitely. I mean, yeah, income statement can be said as a video or time lapse from from one year end balance sheet to another year end, but it actually records from the heads and brings the balance brought down uh, of, I mean, the total that is there. So both the statements are false. So coming to the next question. Now we are talking about handling profits. Dividend can be announced on the basis of profits after tax. Statutory provisions require that half the profit before tax must be transferred to the general reserve. So now you saw that example, right? That there were some profits, then you gave away some dividend. That part became your retained earnings, and finally it got added up in the owner's equity. So owner's equity, you can say. So now the question comes. There is a statement. Statutory provisions require that half the profit before tax. This dividend could have been any number, right? I mean, if you have to increase the capital of your company, you will have to withhold more earnings that you are getting. So half the profit before tax, actually there is no such thing. So that makes the statement 2 false. What about the rest of the part? Must be transferred to the general reserve. Okay, I will leave it to you. Now, dividend can be announced on the basis of profits after tax. Profits after tax, profits before tax. There is some difference, right? So, should it be profit after tax or profit before tax? I mean, the gross profits.
Profit of after tax.
Why?
I think so.
Okay, why so? I mean, what made you think that? Mm,
Because
okay,
because
yeah,
dividend is given to the stake to the shareholders. So
yeah,
you cannot transfer the tax burden on him. So that tax has to be expense has to be subtracted before you distribute to shareholders.
yeah. I mean, that is, I mean, what you can say, ideally, you should be doing that. Okay, let's first resolve what are the expenses, whatever we have to, whatever the company has to settle, and then we'll think about the owners, right? And yeah, in some cases it might also be that profit after tax is negative because you have been paying so much of tax, or something other happened, you paid some interest and you haven't earned anything. Yeah, I mean, jokingly. So that makes that, yeah, dividend can only be announced on the basis of profit after tax. So statement 1 is true, statement 2 is false. Now we will see what happens in these cases numerically. Okay, so there is one engineering firm that, okay, how many of you are engineers? Okay, one.
Myself, sir.
Okay, three now. Four. Five. Okay, I mean, the course is introduction for civil engineers, so I was hoping that most of you would be. So let's see if this scenario makes you quite optimistic. Okay. Uh, Actually, just divert. I mean, sidebar. These values don't have any relation to the realities. I mean, these values are fictional, so don't take them on your heart. Okay, so an engineering business is expected to have revenues of rupees 20 lakh each year. The cost of producing the manufactured items consisting of labors and raw materials amount to rupees 12 lakh. The overheads are rupees 1 lakh. The interest on debt is rupees 1 lakh and tax rate is 20%. I mean, if it is a service provider, you know that now GST rate is 18%. I've just taken 20% for quick calculations. Okay, so now you have to answer the following. What is the gross profit? What is EBIT? How much is the tax paid and what is the net income? So in the previous example, we made a balance sheet. Now what we are going to do is we are going to prepare a profit and loss account or income
Cost,
statement.
overhead is also a cost. Interest and debt is also a cost.
Yeah. So guys, uh, and thank you, but can you guys lower your hands? Okay, thank you. So coming to the question again, what is the gross profit? Okay, let me start writing. Yeah,
4.8 lakhs, sir.
4.8 lakhs gross profit. Okay, let's see if we are getting that value.
Yes, sir.
So what you have got is you have got a revenue 20 lakh. So now cost of producing the manufactured items. So you can say that this is cost of goods sold, right? 12 lakh. So that brings your gross profit as 8 lakhs. I mean, that is how we have been calculating profits since our childhood, right? Selling price minus cost price is equal to profit or loss, whatever be the case. So similarly, you've been given that you sold it for 20 lakhs and the cost was 12 lakh. So your gross profit becomes 8 lakhs. Now, but this was your gross profit. You had some indirect expenses. So what you have been given is that your overheads are uh, 1 lakh, right? So overheads 1 lakh. So this brings your profit to 7 lakh. Now what do you call this profit? Is there some term for this? See, we calculated this, right? So, I mean, by logic, your second question must answer this part. We are going step by step. So, EBIT or PBIT, what are these terms? Anybody? This was covered. Okay, so this is basically an acronym for earnings before interest and taxes. So it's like you had gross profit, then what indirect cost you had, you already subtracted it. So now what you are left with is these are your earnings, but before interest and taxes, right? So if someone asks you, so now what you have to do is you are calculated this part. Now let's subtract the, or I would say subtract. Let's pay the interest that we have to pay, 1 lakh. So how much is it now? 6 lakh. Now you tell me how much tax do you have to pay? I mean, now you can say that this is kind of coming towards your net profits till now. So you have to pay them. You have to pay interest on this number, 6 lakh. Sorry, pay taxes. What is your tax rate? 20%. So how much tax are you going to pay? 1.2 lakh, right? So you have to pay tax 1.2 lakh. So your net profit or income becomes 4.8 lakh. Yeah. So we came to the 4.8 lakh figure. Thank you for the right answer. So I hope you guys got the steps. Uh, can you please repeat? I didn't hear what you were saying. Okay, so no confusion. Should we move forward? Okay, so now we will talk about one other thing like cash flow. Obviously, there is some cash coming and going, you have to pay the dividends also. So, till now, we had uh, some income statement, some balance sheets. So let's start focusing on the cash flow. Why diverting towards cash flow? Because our next topic would be working capital. That is basically how much cash you have to work around, right? So you have been given some data. So shall we start preparing the income statement and determine the dividends? Okay, so let's do it. Okay. Sorry, EBIT is 3 million. So that makes it 3,000. What is depreciation? Depreciation is 300,000. Then what is the interest? Now interest is also given, right? Interest is 500,000. Is there anything else? You have to pay the taxes also, no? So what would be the tax here? What would be the tax amount? You guys will have to calculate this. Anybody? Mm, 10 lakh 50,000. So I mean of what number are you bringing? I mean, see, earnings before interest and taxes. Uh, now there is some depreciation also, and some interest also you have paid. So will it reduce your taxable income? See, you know that we have got depreciation calculation, and it is not something that you are spending, but uh, anyway, it is getting your income is reduced by the amount that got depreciated, right? Mm, any answer would be good enough. Okay, so let's just do it. Uh, that brings your uh, yeah. This is your taxable income. So tax would be 35% of this. How much is it?
Point of like
Uh, yeah. Was this the number you were saying? Uh, sorry, can't hear you. Okay, so what I'm getting is
So,
yeah. So this is the tax. Now what next? What is your net income now? So net would be this figure minus this.
yes.
Uh, okay. So yeah, this kind of seems. What about dividend now? How much dividend will you pay?
60%.
Mm, yeah, 60% of what amount? So 60% of your net profits, right? I mean, we talked that dividend is based on profits after tax. So your dividend becomes 60% of this. And how much is it?
858,000.
858,000. So if this is your dividend, then your retained earnings becomes net profit minus dividend what you have paid, right?
8.58 lakhs.
5.72.
Yeah. Okay. So you have got. Um, I hope the number of zeros are correct, or have I messed it?
It's correct.
Okay. So now you have determined the dividends paid to the shareholders. What about the cash flow? So cash flow, you can say that um, there is some cash incoming. We are not talking about cash outgoing, right? Net incoming in terms of cash, and out of this you have retained some, and you have paid as dividend. So what is the amount that you have retained here? Mm, okay. So paid as dividend. This term is quite clear, right? 85 at triple zero. What net incoming? Uh, how much did you receive? Right? I mean net cash flow. So you would say that you earned this much. You paid as interest. Then you paid some taxes. That's it. I mean, this would have been your net, and you paid.
Any operating cost, it may be we must minus.
Okay, we took care. I mean, we have got EBIT, earnings before interest and taxes. So operating cost and all, cost and sales,
Okay,
everything.
okay, sir. It will cover in that.
Yeah, everything has been taken care of, and you have paid 858 to as dividend. So what is the cash you have now? 300 plus 500 plus 770 plus 858, or I mean, sorry, it should be minus of these, no? Um, so your cash incoming is 870 872,000, and how much have you retained? 572,000. So you can see that there is some high difference coming, or did I make a mistake again? Guys, I will need your answer because I guess okay, so I will repeat this point. Uh, what is the net cash flow that I mean cash flow that came? So you will say that your earnings before interest and taxes were 3 million, out of which you paid 500 as interest and 770 as taxes. Rest of all is the cash flow, right? So that part would just be 1730, out of which your retained is 572. I mean, if you are paid as dividend as 878, then how much should be retained?
572.
No, why 572? I mean, if this is the cash that is coming, and if 1730 is the cash that came, out of which you paid 858 as your dividend, so how much should be your retained earnings? Retained cash? I mean, obviously, if 1730 came and you paid 858, so remaining of that is 872, right? So from this calculation, you are getting retained earnings as 872, and previously you were getting it as 572. 300 का difference आ रहा है.
The depreciation value, right?
Yeah, depreciation हमने वो खर्च तो किया नहीं है. I mean
Correct.
that,
It's an
right?
internal thing.
So I mean, is there did I do anything wrong, or is this cash flow correct? I'm stressing on this only because of this depreciation part. How does this affect your cash flow?
It was told in the lecture that depreciation will be taken for P&L but not for cash flow.
Yeah. So I mean, yeah, that was told in lectures. Why?
Mm.
I mean, okay, I will let it be. So yeah, so it won't be taken for cash flow. So you have got retained cash flow as 872. Now moving forward.
But won't that depreciation, I guess, right, because of the nature, it will not be captured in cash flow anywhere.
No, no, no. Uh, okay, I guess there is some why, or I mean, how is it happening? That question coming. See,
Hmm.
what is happening is that you have got the provision of uh, re- deducting depreciation from your income to get your net taxable income. But this depreciation is not in terms of cash, right? You are not spending. You are not spending paper money in this.
Correct.
So when we're talking about cash flow, we are worried about the paper money or current assets and liabilities. So in that case, depreciation has gone from your asset side. I mean, asset value has reduced, but it doesn't make any change in your cash flow.
Okay. So is depreciation the only such a entry which is not accounted in cash flow but taken in P&L? Like there are no other entries up there, right?
Uh, See, when you talk about in this sense, it makes that okay. First you make income statement and then you make cash flow and then you don't
Hmm.
account for depreciation, right? You're
Yeah.
sounding like that.
Yeah.
So no, it doesn't happen like that. In cash flow, we are just worried about what cash has come and what cash has gone. We are not even talking about depreciation. If for calculating the cash flow, what we did was cash that came in, it was earnings before IT. So it was $3 million. Cash that went out, you would say we paid the interest and we paid the taxable, we paid the tax. So that made your net cash. Then you also paid out dividend. So whatever is remaining is your retained. I mean, I'm not talking about depreciation or any other thing that can be, that shouldn't be in this.
Cash in, cash out.
Yeah.
Okay.
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 Does this sound good?
Yeah.
Okay. So coming coming to our next question. This is quite big, but mm, so what you have to do is right now we had three questions where we had different. I mean, we prepared balance sheet, and then we prepared income statement, and then we prepared cash flow. So preparing all these three for the same problem. So I will give you guys a minute to read the question. Engineer starts a business by paying 100,000 in equity capital. During the course of first year, the business made sales of rupees of $89,000, incurred variable cost of $35,000 and fixed cost of $10,000. Then there is some loan coming. So if there is a bank loan, you have to pay them interest. Sorry, just a moment. Similarly, you used the funds to purchase a machine and to fund working capital, out of which 10,000 is your accounts receivable and 20,000 is your inventory. Machine also depreciated on a straight line basis over 10 years. Take salvage value as zero and tax rate as 40%. So, okay, a question for you guys. Is there anybody who cannot solve this question now? I mean, we did it separately. Now, this question just asks us to do it combinedly. So, anybody who cannot do this?
Sir, at present I can't do this, sir. I'm in traveling.
No, no. Yeah.
Anyhow, I will.
No, yeah. That's okay. I mean, I am just asking conceptually. Does somebody have any problem in doing this?
Okay, okay.
Are the concepts clear for this part? I mean, if it is, then
Yes, sir.
we won't solve it. I mean, I will leave it for you guys. And if there is some trouble, we will do these calculations. So, anybody who would like me to do these calculations again? Okay. Going once, going twice. Okay, passing the question now. I will. Or is there somebody? Okay. No last moment buyers. Okay, yeah. So, ma'am, I mean, can you use your mic? So do you want me to solve it or pass it?
Sir, if you're working it out, then we can found it little clear than what we have understood now.
Uh, okay, so what I would do is, uh, okay, uh, can you guys do this in steps right here? So let me let me talk what is happening. That would be one thing here. Yeah. So let's suppose that you have to prepare income statement. So how would you prepare income statement? You have been given sales. What are the sales? Uh, Sales are $89,000, but the cost of goods sold is $35,000. So your gross earnings becomes the. I mean, can you follow this? Uh, okay. Let me try writing it out. If you guys follow, it would be easier. So we have got sales 89. We have got cost of goods sold of 35. That makes your gross profit as how much? Yeah, 54. Now out of this, what you have spent? There is some fixed cost, right? Hmm. So 10 you have spent like this. What about depreciation? Straight line depreciation on how much? Uh, yeah, machine. What is your machine cost? Machine is uh, guys, do you really want me to solve it? Okay, let's do one thing because I feel the time crunch. I will come back to this question again. Everything is just written. We have to take it out individually. So right now, when we discussed the cash flow part also, our thing and cash flow and income statement together, I said that we go back and calculate the values from the basics. We are not uh, taking any help from previous problem we did, right? So is there some kind of a relationship between income statement and balance sheet? You saw now that balance sheet is a snapshot in time. Income statement gives you whatever happened during that period. So is there some kind of a relationship? That relationship can be shown using a financial tree. Let's see what. Have you guys gone through this financial tree in your lecture, in the lecture, or somewhere else?
It's not in the lecture.
Okay, so I mean it's quite initiative. So I'll just sum it up. Like income statement. What do you have in income statement? You have got sales and you have got costs, right? Sales is plus, cost is minus, and from there you got operating profit. This was the case. Uh, what about um what about your balance sheet? Your balance sheet has total assets, right? And total liabilities. This was on the plus side and this was on the minus side. So if someone asks you that, okay, how much return are you getting of this business? So you would have said that, okay, I have invested this much and this is my gross profit, right? So that would have given you your return on assets. So this would have given you your return on assets. uh, but you know that from total assets and total liabilities, the value you get is owner's equity. So if we talk about that, how much did the owner earn? So you would have said that okay, this is my operating profit. Then there was some taxes, negative value, right? Then some interest you paid. Then okay, it might be possible that you are getting some other income, right? So if you take all these, what will you get? You will get your net income, and from these two terms, right, owner's equity and net income, what you will get is, I mean, this was the equity and you got this return, so this will be your return on equity. So now you can see that these two things, interest statement and balance sheet, we kind of tried to link them in a same page. I mean, brought them on the same page. Okay. So now coming to working capital. What do you mean by working capital? Anybody? I mean, we discussed it initially. You guys can hear me clearly, right?
Yes, sir. Sir, working capital means the amount money that he is having in spare hand, so that if any delay in the bill, that revenue means he can manage it. That
Okay. So money in hand to balance some to deal with some contingency, right? That's you said. If there is some
yes,
delay.
sir. Yes,
Okay.
sir. Yes, sir.
Anybody else? We are just discussing. So any answer is a good answer
Yes,
right now.
just to build up on what he said, it should
Yeah.
be current assets in hand to pay off the whatever needs to be paid off, rather than total assets. Should be current assets in hand.
Okay. So you are saying that we should just consider the current assets to pay off, right? And
Yes,
that current asset, it's not necessary that it only be in terms of cash. It can be anything, right? If you can monetize it fast.
it should be cash.
Okay, should be cash. So you
I think though it's clearly mentioned in the lectures what it is. I've forgotten.
okay. So but you said current asset, right? So let's see what kind of what is happening. Okay. So you have some cash in hand. What do? You buy some raw materials. Uh, who gives you the raw material? I mean, how do you buy it? How do you convert it into cash? Buy some suppliers? Okay, we'll come back to that. Okay, you had some cash, you got some raw materials. What will happen now? It will go into uh, stock work in progress. How? You will add some wages or overheads, right? Wages or overheads, if you add here, it will make your stock work in progress, like the calculations we did on your balance sheet. We are just trying to visualize them. But how are you paying for these? Again in cash, right? Now, this stock will make your finished goods. Uh, Again, this change can only be brought by, right, paying more wages. Of If you sell this finished goods, where will it go? Debtors, right? I mean, someone bought it, but someone bought it on credit. So you can say that is account receivable. And once you receive the cash, it will go into your cash. Now you also have to pay to your suppliers, right? suppliers or creditors, and they will give you the raw material. So can you visualize the uh, yeah, sorry guys, it seems that my network got disconnected. Where was I? uh, yeah, my network got disconnected in the mid. So where was I? You guys can hear me now, right?
Yes.
Okay. So, did I complete the cycle before only? Before the network error?
No, you mentioned something about accounts receivable, and then it
Oh,
got disconnected.
okay. So, not much that means. So, you have got account receivable. I mean, you are selling the finished goods to them. Once you receive the cash here, your cash increases, and then you have the cash. So, you pay to your suppliers and creditors. They again give you the raw materials. Can you visualize the cycle clearly? And is this the same thing that happened when we were making the balance sheet for different times? I hope so because we were following the same. Uh, okay. So now this is some kind of a current asset cycle for which you need some cash to go on. So let's add some other terms: operating cycle and cash cycle. Now, as you can see, that the cash flow happened at I mean, the cash exchange happened at different points of time, right? I mean, it didn't happen at the same moment. Like you bought some raw materials, but you paid them later. I mean, if your condition said 2 weeks later or 1 month later, you paid them later. Yeah, but you raised it in your account books because you have accrual basis, right? You do entries on the accrual basis. So let's try to see it on a timeline. Okay, so you place your order, but you don't get your order on the same day, right? I mean, there can be some lead times. So let's suppose here your stock arrives, and at the same moment of time you will enter it into your balance sheets, right? Accrual. And as soon as your stock arrives, अब देने वाला जब भी देता देता छप्पड़ फाड़ के, तो वो स्टॉक भी देता और साथ में बिल भी भेजता है. Okay, sorry for, I mean, did anybody of you find it funny, or it was just me? Okay, so it was just me. uh, so it comes with invoice. Now, if this stock arrives, you know that there is going to be some lag. This is the time axis. So there is going to be some time lag. Why? Because stock is there. Now uh, you have to make it a finished good, right? So after that, it is getting sold. So goods sold, and after invoice, somewhere along the time you have to pay them, right? बिल भर रहे हैं हम यहाँ पर. So cash paid. And similarly, if you sold the goods at this point, you will make an entry in your balance sheet, but you might receive the amount later, right? So this is when you receive your cash. Anybody who has any I mean, who doesn't agree with this? Okay, so no objection. I will consider that you are fine with this. So let's see. Let's try to see the cycles here. Okay. Stock arrives and good is sold. So this is where your inventory only at this part of time you are indulged in your inventory, right? What about this part? Like this is your wait account payable uh, period, right?
Okay.
Because we are talking in terms of time, and this will be your account receivable. uh, so how long are you indulging the cash from cash paid to cash received, right? So this is your cash cycle actually. I mean, when you pay, between paying and receiving, that is only when you are worried about cash, right? But what about operating? You will say that once my stock arrived and when I received the cash for it, this is my operating cycle. Okay, I mean, so much cycles and periods. Why are we worried about these things? This actually tells us uh, when we talk in terms of वर्किंग कैपिटल दैट हमें किस पीरियड का ध्यान रखना है, कब पैसा चाहिएगा, कब कितनी बार ट्रांजेक्शन्स होंगे. So you have got some cash cycle, you have got some operating cycle. Quite okay, not that clear to imagine, right? Let's give these terms some numbers. So another question for you. Uh, yeah, the relevant financial information for company X for the year ending 2022 is given below. What is the length of operating cycle? The cash cycle. Assume 365 days in a year. Okay, so you have been provided with the P&L account and balance sheet data. As you can see, balance sheet data is from 2 years, FY21 and FY22. You have to determine the length of operating cycle, cash cycle. How will you do it? Anybody? So what is happening is, let's try breaking things down. And these are two numbers. I'm quite not interested in what is happening. So if we are talking about somewhere in the middle of the year, let's just average them out. So what is the average inventory? 9 plus 12 by 2, right? So your average becomes 10.5. This is 12.5 and this is 11. So can you guys tell me what is the meaning of inventory 12 lakh at the end of financial year 22?
Don't know, sir.
Okay, so we will go back to our basics, not those basics, not that back, to balance sheets. If cost of goods sold, this kind of gives you that okay, this much is the cash you have in your hand. Like 56 is the cost of goods sold, and overall your inventory is 12. I mean, there is still some number that you have. What would have been happening is that initially you have some uh, initially you have 10 lakh cash. What did you do? From this you bought 10 lakh of raw material. From this 10 lakh of raw material, you added 2 lakh in 2 lakh of wages. So 12 lakh of material, 12 lakh was your final cost, right? You sold it for 15 lakh. Now let's suppose that selling from this to this, it took you 3 months. So again from 15 lakh you will start the same cycle. Do you guys agree? I mean, if you're talking about a whole year and while making balance sheets and all these calculations, we have one assumption that the company will go on forever. I mean, it won't, the operations won't stop. So, similarly, after 3 months, when you have got some cash again or some cash receivable, here 15 lakh, again the cycle will start. Maybe it's not 10 lakh now, you are buying it for 13 lakh, and uh, okay, from 15, let's yeah, let it be. So from 13 lakh, again you have got 15 lakh of material, and for 15 lakh you are selling it for 18 lakh. Another cycle, 3 months. So if someone asks you that, okay, what is the average inventory period, just by looking at the numbers, there has to be some way to calculate it, right? This is the thing that we are trying to do here, because what happens is that at the end of the day, uh, you are providing outside people or the accountants only with the tables, uh, and this thing, if you, as you have gone through the lectures, you can see that there sir directly talked about that you have to pay after 2 months, or you keep your inventory for 3 months. So how to calculate those numbers from the tables, we are looking at it. So inventory period, how much it would be? Your average was 10.5. So 10.5 and cost of goods sold 56 into 365. If you want to convert it into days, how much is it coming? 68.4375 days. Uh, okay, just I am coming back to you guys. Are you following what is happening?
In the problem statement which Professor Sudhir was showing,
Yeah.
there he had on those problem statements directly the period was given.
Yeah.
2 months, 1 month, 1 month for the debtor, 1 month, 2 months for the creditor. So we didn't have to do this additional calculation of from a cost value or from a sale value. We didn't have to derive anything period wise. That's why.
Okay, so yeah, the thing happens is that when you look at the account, when you look at the books, I mean these P&L statement or balance sheet data, you don't get the values in terms of months or days, right? What is the cycle? But you know that there is some relation between them. We just saw the uh, what you can say. We just saw this operating cycle and cash cycle. If the same thing is given to you in terms of cash, how to convert it into time, that part we were discussing here. Okay, so uh, I hope you get the sense of these 2 months, 4 months, 1 month period that was discussed in the question in class. How to calculate it, there are some basic formulas, so if you need it, you can refer to them. I just hope that you get the idea of cycle time and period here. I mean, what period we are talking about. Operating cycle is of inventory period plus accounts received when you get the money back, and cash cycle is from cash paid to cash received and again.
No, that's why it was not covered in the lecture. So you please continue. But the thing is, we're not going to answer. We don't
Okay,
know.
So yeah, that is my oversight. I should stick to the portions. Yeah. So this is where everything is like the lecture only. Uh, so uh, that part was the previous one was how to calculate these durations from the values from the account books. Now you have been given the values and you have been asked to determine the working capital and make the I mean prepare the account books. What is happening is you have got sales at 2 months credit of 36 yeah 3,600,000. So that means that if you're selling the goods today, you will receive the payments after 2 months. Material consumed, supplier has also given you a 2 month credit for 900,000. Wages paid monthly in arrears, simple as that. Similarly, manufacturing expenses that are remaining at the end of year, 1 month arrear for 80,000. Total administrative expenses 240,000 and sales promotion 120,000, but they are paid quarterly in advance. So that means you have to take 30,000 into account while going. Company sells its products on gross profit of 25%, counting depreciation as the part of cost of production. That means you don't have to calculate depreciation separately. You just take 25% and move on with that. It keeps 1 month stock each of raw materials and finished goods. So that kind of increases your work in, I mean, raw material stock also and finished goods also. What about work in progress? So the question is given that you have to ignore work in progress. And there is the cash balance that company keeps of $100,000. Uh, yeah, 100,000 rupees, whatever it is. And assume that you have 20% safety margin. What is the safety margin? That initially we talked about in definition of working capital. So to cater for the contingencies, you have got 20% safety margin, and you have to calculate the working capital requirement on cash cost basis. Again, a very big question that will make us skip the ratios part. Does this question sound similar to what was done in the lectures?
Yes, it was. It's almost the same because he had given the timings and all he had given.
Yeah. So, okay, we'll see if we can visit this. So now coming to the ratios part. I mean, does anybody have any problem if we try to finish the topics first? If conceptually everything is okay, then we can move.
Sure, sir.
Okay. So coming to the ratios part, what are ratios? Why ratios? Anything? I mean, why do you need ratios?
To compare every item.
Okay, to compare. What are we comparing? I mean, yeah, ratios are there, so we are comparing something, but what are we comparing? Okay, so let's suppose that you have been given accounts of Reliance Industries. I mean, any one industry you pick. And on the other hand, you have been given accounts of a mom and pop store just round the corner. There is going to be a humongous difference in the numbers that are popping. Just the number of zeros would be, quite vast. You agree, right? One would be talking in terms of thousands of crores, and others would be talking in terms of lakhs only. Uh, but if you have to compare these two, you would say, there's nothing to compare, right? But when you to check the financial condition of these things, these two firms or the two account statements you have in front of you, you will have to compare them on the basis of some ratios. So, two basic ratios have been discussed in detail in the lectures. Current ratio and quick ratio or acid test ratio. So what are these we will discuss. What is current ratio? Current ratio is simply uh, current liability, current assets upon current liabilities. Why are we worried about current liabilities and current ratios? Sorry, current liabilities and current assets. So that if there is some liability and you have assets covering that part, that company is financially sound for you, right? Like for that mom and pop store, let's suppose that his current okay, let me try giving values because mm, he has a stock of 20,000. He has some cash of what you can say 40,000, and there is some creditor that he has to pay 25,000. Okay, so you can say that his uh, current assets are 60,000 and current liabilities are 25,000. So that brings you his so will you call this person financially sound? I mean this firm financially sound or not? See, he just his liabilities are current liabilities are limited to 25,000. Like if today someone comes and asks him that you just pay me back the money that you owe me, that amount is limited to 25,000. How much does he have in current assets that is like readily accessible to him? 60,000. So you will say now that if that person, if every creditor comes to him at the same moment, then also he can pay them and yet be in business. So he is financially sound. Do you agree on this? I mean, this has been a big issue in case of news also. Like, बड़ी बड़ी कंपनियां बड़े बड़े लोन्स और चुकाने के लिए पैसा नहीं. अब यहाँ in this case you can see that loan is there, and to pay off the loans, I mean there is some credit, and to pay off them you have got assets also. So is this financially sound or not?
I think in current assets also, because the threshold for a current asset is that 1 year value. So that is why that quick ratio we'll have to consider for to really get an idea of the current soundness of a company. Right?
Okay. So, what you have done is you have just moved one step further in this case. Uh, so, yeah, let's see. If you have the ratio of current assets by current liabilities, in this case it is 60 by 25, right? So, 2.4, that is a good number. I mean, you will say financially sound, but what happens if the creditor comes and asks him to pay? You will say that he has to pay from his cash, right? I mean, he can't just unload his stock at the same moment. So we have got uh, quick ratio. The name suggests that, okay, quick ratio or acid test. I mean, acid test. I mean, something far fetched is happening. So in that case, it is 40 by 25, 1.6. So again, a good number. So if you have been provided with the balance sheets of different companies, from this you can judge now that what is going to happen. Like any big airline owner got in lot of debts and banks knocked his door on the same day. If he had sufficient cash in his hand, he could have unloaded it. Even if he had sufficient current assets, but he couldn't convert it into cash that fast, that would be a problem for him. right? You know the example, or you can. So similarly, if you talk about quick ratio would be current assets minus inventory, because this inventory will also take some time to offload by current liabilities. So yeah, a firm has current assets of rupees 125 and inventory of 63,000. The current liabilities are 68,000. Find out the current ratio and quick ratio with a given industry norm of 2 is to 1 and 1 is to 1 respectively. We discussed liquidity already. So what is this current ratio? One 25 by 68. How much is it?
1.8, sir.
Okay, 1.8. What about is quick ratio? This would be 125 minus 63 by 68.
Point 91, sir. 911.
Okay, 0.911. Now the industry norm is that this should be 2 is to 1 and this should be 1 is to 1, right? So that means by industry norm, this firm is not that financially sound. You can say now that what should be greater than 2 is to 1, it is just coming 1.8 is to 1. What should be greater than 1 is to 1 is coming 0.911. So when you talk about comparing with ratios, you also have to have some industry norms in mind so that you can compare them. So yeah, this is not that financially sound. On the basis of industry norms that are there. Okay, so let's try it from another question. This question is also from previous year's assignments. Three companies, we have to compare these three companies. Like we said, now ratios are for comparing. So what you have to determine is what are the current ratios and what are the acid test ratios. So let's calculate. Cash, that is your current asset, right? Uh, Debtors, current assets again. Then you have got inventory, current asset, and you have got current liabilities. So summing the current assets for each three of them, how much is it? This is 30,000. For this again, 8 plus 6, yeah, 14, 30,000. And this 20, yeah, 30,000. So same current asset, same current liability. So current ratio is equal for each. So current ratio, how much is it? 30 by 10, 3. 3 is to 1 or 3. What about acid test ratio? Similarly, like 80x would be equal to what you can say, 30 minus inventory is 10, right, by 10. So 2, 80 by 30 minus 6 by 10, 2.4, and 80 is at 1. So y is greater than x and z is the least. So statement 2 is also correct. Yeah, you see three companies right now with similar cash in hand, with with same current assets and with same current liabilities, yet different behaviors. So would you like to comment on this part? See, you can see in front of you, the table is in front of you, that for one person his inventory is 10,000, for another person his inventory is less 6,000, and for another person his inventory is higher 20,000, right? So which of the above is going to uh, be generating more profits? I mean, the person with more inventory can sell more, na? Just like, think in the basic terms. Inventory, that means he has more stock. More stock means more stock can be sold, so more profits. Can you follow this? What is happening? I mean, we are just trying to understand how this table came. That is not the part of our exercise. Just like we tried to understand how the values of 2 months and 3 months were coming. Similar exercise.
Yeah, just to interject, I just had one query in the theory itself.
Yeah,
For the quick funds, we are taking out inventory, but
yeah.
we're not taking accounts receivable out. But account receivable also, there is no guarantee that we will be able to able to liquidate or get it from the debtors faster. But still, in the calculation and theory, it is taken part of quick funds. So
Uh,
doesn't that sort of defeat the purpose? Shouldn't be only cash in hand for at least the quick ratio.
okay. So let's yeah, that is what I can say, that is an interesting proposition. But see, we are humans, and we are quite good as well as quite bad at judging other people, right? So if we have if there is some debtor uh, who owes us some money, we can judge that if he is going to pay us or not, or if he is going to pay us, what can be the bad debt, right? Can we do that or not? I mean, from the past history or from how he is treating others, can we make a sound judgment? I mean, can we judge this thing? That is my question to you. Like, you have loaned your friends some amount. So can you make a guess that okay, this friend will give it to me whenever I ask, and this friend will take some more time to pay me back. And for this friend, I don't care if he gives me or not. He's just my best friend. So that part you can calculate or not. That is what I'm asking you.
No, that is true, but there is no classification for debtors of being short term or long term. It's a single grouping. That's
See,
why.
okay. So about short term and long term, yeah, there is a classification. If it is a long term, then we won't be considering as a current asset, right? And about being the classy or being distributing it like this, we have that bad term, yeah, bad debt we discussed already, right? If this loan is supposed to be a bad debt, we will include it in our balance sheet itself, income statement itself, and
No,
its
no,
effect.
no. I'm just, it's just a theoretical question. You're
Yeah,
right.
yeah,
No, no,
that's
because
what I'm
we're
saying.
just no, we're just playing on the definition of current asset being that 1 year threshold kind of thing. No?
Yeah,
So even debt. So if the whole point of I understand our asset test is like you will get maybe 20 days, 25 days to prove your worthiness as far as asset test is concerned. So when you have these good, reliable debts, but within 1 year, but not in short term, so
uh,
in that case, it's sort of I just rhetoric.
yeah,
No, it does not real life, but I'm just saying
yeah,
it sort
uh,
of
yeah.
dilutes the purpose.
It feels like that. But the whole point of the exercise is that we know what amount we can raise very quickly. That's why it is current asset. I mean, we will listed them in the order of I mean, increasing liquidity, right?
Correct, correct.
So, and in terms of assets, we seldom have this 1 year threshold. It is quite different. I mean, when we talk about assets, the debtors, uh, in current liabilities, we usually have this 1 year threshold. In current assets, we don't have such division. For any receivable, we are putting it as a current asset, right? Even if that guy is supposed to pay us in 2 days or 20 days or 1 month.
Yes.
In current liabilities, of course, that if we have some short term loan, so that's why we have that threshold there, 1 year.
Okay.
Yeah, and if you feel that you have them in current assets because you can uh, liquidate them fast. That is the definition why you have written them there. If you
Okay.
can't and you know already, you would have provisioned for it in bad dates. That's
Okay.
what I can say.
Okay.
Okay, so coming back to the point, as I mean, what I was divulging into was that you have got different inventories, like uh, you have got some, you have got Z, which is very aggressive trader, like a lot of inventory, so lot of things to sell. For Y, you have got a conservative one, limited inventory, limited things to sell, but he has a lot of receivables. And in case of X, he is kind of a moderate one, averaging both of these out. So aggressive ones are supposed to get less score on acid test or acid test, but these are the ones who will be having, I mean, who have more chance of making more profit, right? I mean, 20,000 in inventory, so he can sell it. If they are selling it for same 20% profit, he can sell 20,000 goods worth of 20,000. Another can sell only of 6,000. So profit reduces. So you can see that increasing the aggressive nature, the profitability is increasing, but the acid test value is decreasing, because you can get this kind of what you can say analytical questions statement based in your exam. Uh, okay, so I mean the time is almost 8 now. Uh, so guys, do you want me to extend the session to go back to these, or first of all, do you have any queries that you would like me to discuss? Any queries regarding the whole course?
So the third question that we have solved, I
Yeah.
want to take a screenshot of that solution.
Sir, I will be sharing the slides very soon.
Okay, okay, fine.
Yeah. It will be on the Google Drive, I guess, in next 15 minutes.
Okay.
Uh, yeah.
Sir, will be there any other session, sir, in these days, like
Uh, no.
after
I
Wednesday?
mean, this is supposed to be the last session.
Okay, sir. So for anything, we can make our questions in a discussion forum, right?
Yeah, you can use discussion forum, or even I have sent a form so that, I mean, if there is some new query popping up there, I will address it.
Okay, sir. Thank you, sir.
Okay. So this course, okay, anybody would like to comment on, because I guess for most of you this was a new course. So did you get to learn something, or any comment on this course as a whole?
Sir, I learned a lot. Actually, I want to learn this course. I was searching somewhere, but I found it in NPTEL itself. So this was very useful regarding, because all engineers, particularly civil engineers, must know what is finance. At college level, it is not known. But at the time of working, when we judge the contract, or when we shortlist the bidding, at the time it will be very useful. Otherwise,
Yeah.
every civil engineer must know what is the worth of equipment, or when we can replace it. Like that, this whole course, it was a very good journey for us, and I feel very good. And I personally thank you so much, sir, because last time I joined this course, but I couldn't give exam due to personal reasons. And one thing I had a difficulty is that whenever we solve that assignments, answers was not discussed. So what happened is I lost my confidence that whether my assumption is good, or where I made mistakes, that I couldn't identify. But this year, due to your live sessions, I learned a lot, sir. And my personal thanks to you. You made a good effort in preparing all these slides and explaining. You spent much time in this. So I feel very good, and I'm very happy, sir. My sincere thanks to you.
Thank you. Thank you very much. I mean, see, this is the first time live session is happening for this course, so that is also one. I mean, one different point this year, and
Yes, sir.
I hope solving these questions, and I tried to add questions from other sources also, just to bring a broader perspective. Uh, okay, just last point. If anybody has any query regarding any topic, and from examination point of view, from topics, from concepts point of view, anything.
Sir, exam point of view, how many questions and likewise, any details can you provide, sir?
65 to 70 questions,
Okay.
but it would be, I mean, uh, you don't have to focus on the question number because the question paper will be said that you can easily solve it in 3 hours. Most of the questions will be similar to assignment questions. I mean, similar in pattern, but different also. 25% would be different.
Okay, sir.
Uh, I mean, this is a personal question. Where were you guys during the whole sessions? I mean, some of you I am seeing for the first or second time in the last session. So that next time, if someone else takes this live session, they can keep that in mind.
No, no, I'm one of the people who joined first time today. I feel the questions that you're discussing are even of a slightly higher order than is there in the assignments. So, thanks for discussing. At least all the lectures are recorded and kept in the Google Drive. So, at least we can go through them and refer them. Thanks for that.
Okay.
Now I feel like I should have joined in the previous sessions also. It's just that some sessions were easier. I did not feel the need for a problem solving, but the I personally felt a huge problem during the simulation and the normal distribution. Those 2 3 weeks
Huh.
and this accounting period week were the three topics where I felt really that some kind of help is required. But but anyway, the problem solving sessions are recorded, so at
Yeah.
least I'll refer to that.
Yeah, they are recorded, and the simulation also we discussed different questions. I mean, not the same ones, but different, bringing another level of what you can say, another level of difficulty in each question. So that also, yeah, that is recorded. You can visit it, and it is on the YouTube, so you don't have to go to Google Drive or something else. You guys have got the links for those sessions, right? Uh, okay, so if there's nothing, okay, um, from where we get the recordings of problem solving sessions, as I've missed some sessions and couldn't find it where. Okay, so you can find it on, I have uploaded it on YouTube. Um,
Sir, in our forum itself, it is there, sir. Like week one, week two, if you go down at last, you can see the problem solving sessions. If
uh,
you click, then find your link. One table will be, Excel table will be coming. In that, if we want slides, we can click that slides. Otherwise, video means YouTube link is also there. Week.
okay, so from what you are talking, it should be somewhere on the course page, right?
Yes, sir. Yes, sir.
Yeah,
At bottom of eighth week. After eighth week, you can find it.
okay. I mean, I didn't visit the portal, so I will show it once. Yeah, so there is this problem solving session. Yeah, this will bring you to the spreadsheet with all the links and material. Okay. So with this, I would like to end the session and the and this whole system. Thank you very much for attending. It was great experience interacting with you guys. Thank you for making this class worthwhile.
Thank you, sir.
Signing off.